Hi everyone, thanks for tuning in this afternoon. Hope everyone's had a great start to the week. Now I'm going to talk about something that I love going on about, and that's saving tax and combining that with some smart business structure decisions. So what I'm going to run you through is where to legally store your excess profits from your business so that you don't give half of it to the tax man. Now you may have seen the Panama Papers being released a couple of months ago. There's a big hint that my answer to this question is it's actually not Panama.
Did you say it is Panama?
It's not.
I heard it was Panama.
None of that. So what I'm going to do is I'm going to draw a couple of pictures up here and walk you through this strategy. So let's imagine you've got an amazing business up here and you're trading through a trust. Now that's a type of a business structure. So this trust is nice and profitable, and you take out enough profit to feed yourself, feed your family, put the kids in school and live comfortably. Now you've got a bit of excess profit left over, and you don't want to take it out and pay a 49% tax rate. You'd rather see what you can do from a structural perspective, again not Panama, to save tax. Now the strategy here is actually to set up a company, and that company's job is to receive a distribution from your business. So it's a distribution from profits of your business. Now the difference is individuals pay up to 49% tax, but companies, when they're receiving a distribution from a trust, they only pay 30% tax. So if you've got excess profits in your business and you want to save 19% tax versus taking it personally versus sending it to a company, then you can actually set up that company, pay the distribution through, and I'll just draw, so companies have Pty Ltd in their name, and distribute that money through. Now a couple of rules with this: you can't just do this on paper. So a lot of people, a number of people actually do set these up and just do paper distributions. But the key here is the cash must go from your business into your company and into the company's bank account. Then you can use that money to invest in anything else like commercial property, residential property. You can invest in shares with the money in the company there. But basically it's a nice, we have a couple of different names for these companies. You've got a corporate beneficiary, and you've also got the name bucket company as well. So there are a couple of names that accountants might throw around when they talk about these sort of companies. But basically it's your family vault. I like calling them vaults. Basically where you put your profits or your excess profits from your business to reduce the amount of tax you're paying. So if anyone's got any questions about this sort of strategy, just pop them in the comments below, and we can go through them. But thanks again for joining us, and hope that was nice and powerful. Harvey, you've got a question? You sure can.
First of all, someone made a comment in there.
Awesome.
He said, "You can store your excess profits in my bank account, bro."
And who was that? Was that you?
It was. Okay, so now my question is, when people don't do or heed your advice, what are they typically doing with their excess profits, and why is that good or bad?
Okay, so what normally happens is they actually distribute their profits to themselves, and instead of paying 30 cents, they pay up to 49 cents. And that's a function of making sure we have a look at your whole family group, identify any other people in your family that can receive these distributions, but also using this corporate benefits profits. So, yeah,
very cool.
There we go.
Sharon Cliff has asked, she is so in for taking anyone's profits. Good one, Sharon. And now she says, so now how do I make a profit? Any tips? Thanks, Sharon.
make sales and reduce your costs. That's pretty much the recipe for profit. And yeah, that's it. Actually, probably don't spend too much time at Byron Bay. You're making me very jealous, Sharon.
I love it.
Nah, alrighty.
What does Cash Rich Business say
About
making profit?
Cash Rich Business. If you come along to one of our workshops, Cash Rich Business says any money that comes into your business, you need to put away a certain percentage up front of your profit. So depending on the stage of your business, that percentage is different. But let's say that percentage is 5%. You need, if $1,000 comes into your business, you need to immediately put away 5%, or in this case, that's $50, into a separate account that's treated as profit. That profit can actually end up in one of these companies. That $50 can go straight into this bank account of the company. That's a bit of an advanced tip for the cash rich business. But there's the answer.
So good.
Yeah. Any other questions popped in?
Not as of yet. Guys, any more questions? Sean, maybe?
Well, we might wrap that up, and yeah, we'll still answer them if you want to pop them in the comments below. Thanks, guys.
Awesome.